I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable where we talk about current market conditions and answer any questions you might have about your subscription. This is my brief bio. For those of you who are new, Rob, Lou, let me know if you guys are new. My background is technology. I worked as an executive in several startups, fintech startups here in Chicago, some of the hedge funds, broker dealers, has been building AI and neural networks for more than half of my life, for the past 20 years and more. And mentoring and teaching subscribers how to trade stock and options. Managing my own money, we have Keith Harwood from Options Hotline, who's used to work for hedge funds and market making. Started his career as a market maker. Also join us in the live trading room. So we kind of have a nice gamut of both, trading and AI technology. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them. I encourage you to visit optionscreen.com to understand the risk associated with trading stock or options. And you can pause the screen to read the remaining of disclosures. And it does show you that there's a financial interest and marketing relationship in avant-garde trading. All right, trading psychology is important. Please read it. Before we jump into trading psychology, let's talk about current market conditions and see if we want to. All right, any questions so far? If you can just type in yes inside of the questions, just to make sure that the audio is working. Usually I get at least some of the questions. All right, so let's look at 10-year yield. 10-year yield has been stable. If you look at the stock forecast toolbox, model is turning neutral as we approach the Fed decision next week on Wednesday, and then unemployment data following. Today, better than expected inflation data. You can see markets are approaching all-time high. Model has turned more bullish, right? It basically saying that we should reach, the path of least resistance is for the stock market to continue going higher and potentially resolve the itself to the upside, and spiders reaching next level would be 700 level, which is break from the all-time highs. And we are right, we're basically at this point retesting all-time highs. Put spread and more thoughts on that one, Fred. We'll talk about Marvel. I mean, I have a butterfly called butterfly, so which needs to go higher. So it is pinned to 100 strikes. So sell and put spread does make sense, a lot of sense to me on Marvel, and we'll talk about it. But spiders continues to go higher. Almost retesting all-time high. If you look at the stock forecast toolbox, it's bullish. If you look at our research platform for the seasonality chart, correlation has been 52% because we had a sharp pullback in November. Not sharp, but 5% pullback in November, which usually is bullish. But November and December, the path of least resistance usually to continue to grind higher, and we can clearly see it today on the better than expected September inflation data. So spiders are up. VTV is breaking, continue to break out all-time highs, and equal weighted S&P following RSP, right? So new marginal highs on RSP as well. All right, we have more and more people. So if you look, but if you zoom out right now, if you zoom out and look at the 6 months prediction, what to expect. I mean, model is still neutral, right? So we need a break above 700, which model does see. For the months of December, it predicted 650 to be the support. So not that far, a little bit below recent, October, November lows. And again, I think to reach the October, November lows, I think two things need to happen. One is hawkish tone on Fed next Wednesday, basically saying, okay, we're going to cut in interest rates in December, but at this point, we don't have anything. We don't know how many interest rate cuts we're going to have next year. Maybe zero, maybe we're going to be data driven. I don't think market is going to like that tone, and I think then potentially you could revisit November, October lows, maybe even break below them. Or unemployment rate jumps higher than what economists are projecting, around 4.5%, right? If it comes in at 4.7, 4.8, then I think then we'll revisit the lows. If we don't have those two events, and assuming no other geopolitical, China doesn't invade Taiwan, or Russia doesn't sign a peace agreement with Ukraine, then or escalates the war. If they sign peace agreement, I think market is going to take it as a positive sign. But reaching, all-time high in December, that's what the model is predicting. And passive list resistance is to slowly grind higher, right? It does see potentially as much as 6% higher by May of next year. And which I agree, I think it's just a matter of the time for the market to break to the upside and continue to grind higher potentially. 6% market up next year is reasonable to me. Then the next level would be 750. So these are the short-term prediction, long-term predictions. If you look at the SPX, now we're looking at the positioning. Joseph, welcome back. We have a lot of people today, but not a lot of comments. I'm a little bit concerned, but it seems like you guys can hear me now. Claude, Don, Fade, Fred, Joseph, Lou, Rob, welcome. So SPX gamma flip point is 67.72 for those of you who are new. A lot of people shy away from options trading. Majority of people are trading stocks, but I would still use the options tool as the way for you to determine major support and resistance, whether you're trading options or stocks. So this basically says that total gamma, right? SPX is the most liquid instrument, one of the most liquid instruments out there. So dealers, right? You always trade, there's a dealer on the other side of every trade. There's somebody's, if you're buying, somebody's selling. And if you're selling, somebody's buying. So dealers make the market, and their books, they have to be basically gamma delta neutral, right? They don't have a view on the market. They have to be neutral. So, and they're running large concentrated positions. So the positive basically saying that the dealers will be supportive, right? For any pullbacks. So they will have to step in to be gamma neutral. They have to step in and buy. So as long as we are trading above 6,700, 67.72, bulls are in control. And I agree with the model. 6,700 has been a very strong support and resistance level. So I would say as long as we're above 6,700, which I think happens to be 50-day moving average. Yep. So as long as we're above 50-day moving average, then bulls are in control. The next level to overcome is 7,000. So the put wall and the call wall basically says that we need some kind of positive catalyst, for the market to break through all-time high and reach 7,000 level. It could be dovish tone of Powell next Wednesday. It could be better than expected unemployment data for the months of November, which would be the following week. And that would be the catalyst, right? And if you want to determine how much money to risk, then I would suggest to use 6,700. So let's look at the December expiration, and you can see the December. Let's look at old strikes. And again, my goal is to answer any questions. So if you have any questions about the market or general question, please let me know. So you can see December expiration, $160 billion. So a lot of positioning in December 19, something really negative has to happen, kind of to shift equilibrium between bulls and bears. January expiration, it's growing, right? About 50 $60 billion worth of position in January 22nd. So market, I think at this point is pretty well positioned for any negative surprises. So the question is going into, if we just look at January, so let's look at December expiration and January expiration going into the next year. And let's see what, sorry, not February. Where's my January expiration? January 16th. So what to expect end of December, end of January, right? So on the one side, you have, someone like Tom Lee, right? That basically says we're going higher. He might have not been right on the Bitcoin, but he looks like he's pretty bullish. And we basically reach an all-time high. And that's what the model Stock Forecast Toolbox also calling for. That end of December, end of January, 7,000, 7,100, right? Or higher, right? So that would be scenario number one. Right, this is Tom Lee. 7,000 to 6,700, we've seen a lot of support, gamma, right? Positive gamma. And then we're trading somewhere between 6,650 and 7,000, right? Between 50-day moving average and all-time high. So that's scenario number two. And scenario number three, we revisit the October, November lows and maybe make new lows, right? And for that, Powell has to be hawkish, or interest rates have to be, or the unemployment is higher than expected. I would say higher than 4.7. That would be a negative, right? Signs of recession. AI trade has been overcrowded and evaluations are at historical highs, right? So then, market could pull back to October, November lows or even break through them. So that's scenario number three. How many of you say one, right? Tom Lee is right. How many of you say three? Mike Wilson from Morgan Stanley is right. He's always bearish. And how many of you say, I'm just going to follow probabilities, right? Going back to your statistics class, this is a 1 sigma move, right? 1 sigma move between 67 and 67,000. And we're just going to trade two. All right, we have people that actually participating. Thank you. Fred, 2. Joseph, 1 or 2. Okay, I like that. Paid both X for access, Tom Lee. Tom Lee is 1. Okay, 1 paid. Thank you. Again, this is the reason I started trading yellow tunnel. Trading psychology is important. If somebody's always negative, somebody's always positive, that's not good, right? You don't want to follow somebody who's always positive or always negative, right? The idea of game theory, right? So game theory is extremely important, right? That you have to be flexible and you just have to, if you're not familiar with the concept of game theory, I strongly encourage you to read it, what game theory means. Right, it's a well-known psychology fact, in economics. But the idea is basically that literature, between bulls and bearish, you probably want to be fluid, right? Be nimble, and based on the data, go different parts of this quadrant. If you're always bullish or if you're always bearish, then that's not good. I mean, if you're on CNBC and Bloomberg and you want to be consistent, then it's fine. But in real life, if you're trading, you probably want to be negative, totally. Okay. So I'm gonna go with Joseph, and not most people said 2. I'm gonna say 1, 2, right? I'm gonna go with the model. I think it's right, and I think the passive least resistance, higher highs, higher lows. If by end of May we're at 750, personally, I would not be surprised. But again, midterm elections, Taiwan, U.S.-China relationship, tariffs, Russia-Ukraine war. All of these things can shift the equilibrium between bulls and bears, right? Between bulls and bears, and but fundamentals aside, high valuations, black swan events aside, the path of least resistance, and you can see based on the current price action, is higher highs and higher lows. All right, how do we help on Tradespoon? Different services. We have active trader. Oh, sorry, Fred asked about Marvell. So yeah, if you have any positions, let me know. But in Elite Circle, you can see all of my trades. Right now, one of the trades, you can see a combination of both stock and option trades. Right? Sometimes I trade options, like I'm hedging 575.90 put spread, closed it, or I close Morgan Stanley position. So it's a combination of both stock and option trades. Sometimes more speculative, aggressive plays like Marvell, right, where we've seen a very large position at 100 going into the earnings, and it's becoming, and it acts as a magnet. It definitely acts as a magnet. We were at 102, we were at 197, but average is at 100, and I have position that expires next week. Obviously, it's a bullish position because I need to gravitate toward 105 for the stock, for the position to be, maximum profit. But this is a position where I'm risking 85 cents, and potentially, it could be a $5 spread, right? Where if it expires next Friday at 105, then I would, can potentially make 400% return. So this is kind of a strategy where you can definitely have a well-defined risk. At this point, 85 cents on a per contract. But the profit is $4.15, right? If it expires at 105, and you don't have to wait. You can close it even now for 20 cents profit, 10 cents profit. But the question was, what about selling put spread? So you can definitely see it because of this high positioning at Marvell at 100 strike. That's why I think paying attention to options data is very important. These round strikes and how many people traded these strikes will determine how the stock could act, right? So even before the event, the highest position was at a 100 strike, and it has hard time breaking through this. You do have 90 as a gamma flip point, so anything above 90, it's supportive. Put wall is 95, so we're trading between 95 and 100. So I think, well, obviously I'm bullish, so selling a put spread is definitely something that does make sense to me. To answer Fred's question, and let me know if you have any other questions. So tools that we use to come up with these ideas, active trader, right? Today, before market open, we have Morgan Stanley, Prudential, right, as a signal. Morgan Stanley has been a signal for, been trading for a few months now. Model really likes broker dealers and investment bankers. And you can see Morgan Stanley is in strong uptrend, breakout, and continues to grind higher. And then the other signal was Prudential, right? So it meant to be short-term signals, right? Signal lasts for 1 or 2 days. You can hold it for longer if you want to keep exposure to the banks or insurance companies. In this case, you can hold it longer. But the idea is that you have 4 active positions. Again, going back to risk management, very important to follow the risk management. 4 positions at a time, maximum loss of 2.5%. Right, so you have Morgan Stanley, Prudential. You can also, we have weekly trader, right? You can look at the weekly trader, posted every week. You have VTR, right? ALB. So you can see ALB is close to all-time high. Selling put spread in this example would have worked well. If you, this data is published every Sunday, right? It's a similar models to aggressive power trade. It's a neural networks, AI. It learns, it finds best model for different sectors and clusters, right? And then it makes prediction. So in this example, VTR, I mean, if you sold put spread, probably break even. If you sold, if you bought out of the money call, then it would be a losing trade. And again, it gives you different choices. You can use stock or you can use options if you want leverage. It's the same idea, same stocks, but then you can leverage or hedge using options. So in this example, 77.5 call, but notice it's still 2.5% of underlying stock as your target gain or stop loss, right? So if the stock is at 80, 2.5% is $1.60, $2, roughly a little bit less than $2. So that would be your stop level using the stock price. And if there's a weekly, you can use weekly options. If there's monthly, you would use monthly contracts. So that's aggressive power trader, weekly trader, monthly trader, same idea, right? Same idea. You just, in this case, you would hold the position longer. You know, an example of JP Morgan, if you sold a put spread, I mean, any strategy, any bullish strategy would have worked on JP Morgan. So that's active trader, weekly, monthly trader, and then I'm using these services, right? You can sign up for tool services, all the pricing here. You can Elite Circle, right? Elite Circle. So it's Elite Circle, you can see all of these trades. So Morgan Stanley, I'm actually in the trade. I close half of the position, and I plan to exit out if it reach 178.50. And looks like Morgan Stanley is going in that direction. Okay, we're 1% away. And then you can see all of the orders position. We talked about Marvell, right? You know, more speculative, more aggressive trade using options, more complicated, right? Sometimes we do iron counter, a sell put spread, call spread based on model, based on you know, implied volatility versus historical volatility, right? In this case, it was butterfly, and butterfly just cheaper to, you know, execute, but you have to be correct on strikes. Right, I was correct on 100 strike, but you know it's acting as a magnet as opposed to pushing the stock higher. So that's Elite Circle. Neural network models. I mean, a lot of companies like Google and Microsoft, they basically build these financial models where you send the input into the models and it learns. Right, just like MML model, like this model, you know, you can feed all of the customer service questions, right? That there's a finite number of questions that Tradespoon has been asked. So you feed into the model, right? It parses it, right? It reads it, learns in this, and then able to make a prediction and answer your questions. Neural networks are the same thing. I mean, there are different models, but neural networks are the models that are able to kind of get the data. It learns and trains on the data and then makes forward predictions. And you know, we didn't write our own neural networks. You know, Google has it. You know, Microsoft has it. There's a lot of neural networks. Works for neural models, right? So it's a multi-layer, you know, and you can see it here, kind of what it's. But it's, you know, there's different types of neural networks models, right? But and it's just decision tree if you think of it like just circles, and you know, so you know which way to go. So you get the inputs, it trains, and then makes prediction. We didn't write these neural networks, but we're using them, and our proprietary information is that we're feeding the data and what data you are training your models on. All right, I do have to go. That's all I have for today. So if you consider Elite Circle, right? We do have Elite Circle as a service. We went over the picks, some of the tools, Elite Circle, all the pricing here. I encourage you to try it out. We actually have an offer. Again, full disclosure, we have marketing relationship with Avant-Garde Trading, but you can trade commission free and get any yellow tunnel services for free for 3 months if you sign up. So I'm gonna drop that link here. Try it out. You know, I do encourage you, even if you haven't already a broker dealer account, I encourage you to have multiple accounts because I think it makes sense in terms of redundancy. If one broker is down, and B, for better tracking your performance of different services, right? Some of you have different Tradespoon yellow tunnel services. Some of you have other services that you sign up for, third-party services. And if you do it all in one account, so this is one thing that in our coaching classes, when we do one-on-one coaching, this is what we advocate, is that you always segregate your different IRA accounts, 401k accounts, and trading for different strategy accounts. So this is an opportunity to trade free commissions. You just pay commission fees, but it's commission free at Avant-Garde Trading, and you can select any yellow tunnel services. Will refund you the first 3 months of the subscription. Thank you, Fred. All right, have a great weekend. Thank you guys for everything, and I'll see you in the live trading room on Monday. Thanks a lot.